So this previous Wednesday, I did a video about the TikTok restrict bill, which, by the way, if you haven't seen that, I think it's important to watch. Big bait and switch from the government. I think the bill's a complete monstrosity, regardless of how you feel about TikTok, although I did give my opinion as well. But today I wanted to quickly cover the market. Well, I say today, but it's actually tonight. This is going to be late Sunday night. This is going to be quick and dirty, covering some charts, covering some pretty massive news that just came out with OPEC as well. And another thing I want to say is that we did just incorporate a testimonial section to the Discord. And a few of the subscribers have already written some really nice things in there. I appreciate that so much. It also tells new users what kind of experience they should expect. And I'll also be using it as advertising on the website. So anything you write there will go on the website, just so everyone's aware. So if you haven't written one yet, I would really appreciate it if you did. It helps a ton. And with that, let's actually dive into the market. Now, before I break down this chart, there's something really important that I want to cover, and it's the way that this narrative seems to be escaping from reality when it comes to what people are seeing in the actual stock market. Now, this might not be the case for the financial side of Twitter, but I do see lots of people across the socials or people I talk to that say, wow, the market looks so bullish. And indeed it does. And I tried a few weeks ago actually to talk about this growing population of people that say the market's really bullish, it's looking really bullish, everything's fine, all these fears are blown up, there's nothing really bad going on. But when you talk, or at least when I talk to hedge fund owners, broker-dealer owners, people who manage other people's funds, that have a fiduciary responsibility to manage those in an appropriate way, people who are handling others' retirement accounts, where if you take a 30% loss on that account, that's all the money they're ever going to make. It's important to protect that. These institutions are sitting on cash. So even though I'm going to talk about, and have in the past talked about, how the market does look bullish, keep in mind that the underlying fundamentals here are very weak. And although we're about to talk about what could be a potential squeeze in the market, do not let yourself get carried away, and I will not let myself get carried away with being too bullish in a market environment like this. And if we look at the S&P again on this daily chart, we see this giant wedge. And remember, the larger these formations are, usually the greater the breakouts. We also see this supported by an inverse head and shoulders, another technical signal that has a very high chance to play out. And we see it do just that. Now we have this tighter, smaller wedge within this larger one as well, which led to that huge breakout to the upside that we saw on Friday. Lots of people were trying to correlate this to news and whatnot, but this move is so fast. It's clearly driven by algorithms and traders FOMOing in. Likely everyone's seeing this at the same time and playing into it because it is so obvious on the chart as well. So what we're looking for next is a test to the upside on this larger wedge. If we do see this break down, we could see more chop for the rest of the month. However, this month, even on bad years like 2008, was a bullish month. It's very interesting dichotomy that we have going on with the market, though, because remember, large corporations such as Apple, such as Micron, such as Google, Meta, that announced all these big share buybacks, those are actually in a blackout period where they can't do any buying until about, I think it's April 28th. So we're not seeing that actually support the market right now. And on top of that, if you look at the bank's reports and where they had their algorithms set, they're actually been net short into this move, which is also another sign that we could see them reverse and try to play to the upside on the market. And then you could see an even larger squeeze. But remember, even while this squeeze is occurring, most institutions, not traders, most institutions are sitting on cash because they know better. And I think right now, you're either going to be a contrarian, if you're an investor at least, you're either going to be a contrarian or you end up being a victim. Now, when it comes to day trading, I'm probably going to be looking to buy some downside heading into Monday, looking for a pullback Monday, Tuesday, and then likely get bullish and do some short-term chasing as well. And if I move my screen, you can see on the 30-minute chart that we have an 82 RSI, very overbought. We see the TTM squeeze also turning over, showing that there is some downside momentum accumulating in this market. So be looking for maybe a test the 200-day moving average, which is still above this inner wedge, and then maybe a bounce from there. That's what I'm looking for right now. So besides the S&P index, I'll share one bullish trade that I have open right now, which is Intel. And this one's sending a lot of good signals right now with this ABC sideways chop, which is what I think actually SPY will end up playing out as well. But if we pull back over to the graph, which I just lost, we can see the wave one, The wave 2, perfect retracement right there. We're looking for a bounce up to the 35 range. This looks like it could chop a bit before we actually reach up there and touch that. It'll likely trend with the market a bit on Monday and Tuesday, and I'll hold through that turbulence looking for this 35 target, maybe even do some more buying there as well. Now, if we take a look at TLT, which is your 20-year treasury bonds, these are the bonds that I like to trade. We can see that we're just chopping sideways. Look like an ABC wave development is going on right here. Usually really hard to trade. I'm still holding the sentiment that I love my long-term calls here, and even though this has been moving a lot, I am definitely willing to hold that volatility. I think that volatility is going to pay out great. Remember, you know, that volatility is a trade-off. You have to have the stomach to see those contracts move down 40% when they have the potential to double overnight if we do actually get a market crash. So I'm going to continue to hold those. I'm also going to straight up hold my position as well. I do straight out own positions here besides having my option contracts as well. And I do see that this could make a visit downward on any of these dips. I'm going to be a buyer there. This is one of my favorite positions. I think this will be likely the big winner of the year, especially if we get that market crash. And now let's talk about energy. And I haven't talked about energy for several weeks because it's been a huge stinker. I'm still fundamentally very bullish here. I don't think there's any reason not to be, but despite that, we've seen that, you know, you have to let price action play itself out, and we've seen this pull back a lot. Now, the OPEC news that we've got is very significant because they're cutting back production. And you might see that as an instantaneous buy because, you know, the squeeze that we've been talking about is definitely could be ignited from that. However, I'd be cautious of the fact that not only the US, but China as well has been building up the reserves. And I would expect them to start releasing these reserves into this news to try and balance that out. Nonetheless, this could be the starting point of people starting to realize that the energy trades could be back on. And we can also see that might be the case for natural gas as well. I mean, this thing visited all the way to $6.94. And this is crazy low, you know, all-time low on the monthly chart here for UNG. It's wild to see. I don't think this is supported by the fundamentals here at all. We can see that on the daily TTM squeeze. We are starting to roll over to the upside, you know, that darker candle right there showing you that some momentum could be building up to the upside. We can also see that we have higher lows developing on this RSI as well. We can see that we've pretty much hit the really bearish RSI here, and it looks like it could start to climb its way up. This could be pretty interesting. I think it could be a buying opportunity that develops for UNG. As far as USO goes, we're seeing the same thing on the daily. This is even more confirmation that more highs could be coming on the way for USL. And so I think this makes energy very appealing right now. So I'll be keeping an eye out there and looking to buy some dips. Now, you have to be cautious if you get into this because there could be a lot of FOMO on Monday, and then later in the week or maybe even tomorrow you start to hear about some releasing being done at the SPR, emergency reserves, where they start releasing those to try and compensate from the tightening that we've seen in the market. Now, remember, China does the same thing. So one of the things that I screwed up in the beginning of the year is not realizing how much China really had in their reserves. And so even though they reopened and they had this huge boom in demand, they continued to sell out of that like we did, pretty much at Biden's level of releasing those reserves and draining them. And so we could see them still have some ammo in the tank to prevent a very big squeeze here. Now, how long can they keep this up when there is less to production overall is limited. All right, so they're playing a losing battle here, and I think that give it a few months, this becomes a very bullish trade. So I'm going to be cautiously treading and looking for those opportunities. And that's going to be it for this report. There's a lot more things I want to talk about, such as why I've been trading a lot of Chinese names. Actually, it's not because I'm fundamentally bullish on China. It's more of a wonky currency trade that I'm doing. Let me know in the comments down below if you even want to hear about that. I feel like Forex type stuff, people really zone out on. They don't like that stuff. But there'll be some individual names on that report on Wednesday that I definitely want to cover. Some small stocks, some cheap stocks that are great for small accounts that I'm very bullish on, some new technology that I've been digging into as well. I think you're going to love this Wednesday's report. But I just wanted to put this out because we didn't do one on Wednesday, and because I think the market is, lots of people are trying to figure out, should I be fundamentally bullish here, or are the lows in? I still don't think that's the case, and I just wanted to put out a quick reminder. Hope you found this informative, and I will see you Wednesday.